Hello, traders. It's 8:03 a.m. Chicago time on Tuesday, the 22nd of December, 2020. Thanks for joining me on episode number 1904. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning we have a summary sheet. There we go. We have a market that is in a risk-on sentiment after selling off yesterday. It recovered during the day session. That was one of the scenarios, and it's holding steady against yesterday's high on a weak high here in the S&Ps. Also, the Nasdaq has pushed higher than yesterday's high. The Nasdaq showing a little more strength. The cat has something to say this morning, and she wants to say it right now. So there she is, screaming her head off. Hang on, you're getting some cat advice right now. She's saying get long. She's saying make sure your stops are in. Um, anyway, it's a nutsy cat. So you can see risk on this morning with the Eurostox and the DAX pushing the highest among the indices. Money is moving out of metals, and strangely enough, the bonds and the 10-year notes are holding steady this morning, but we're seeing a market that is surging back to where it was. Um, yeah, get yourself a Bengal. They're like a little puppy, very playful but very high energy cat. Anyway, risk on this morning. The focus is, of course, was on the stimulus, which passed a little less than 900 billion. Big fight there. Congress approved 892 billion, which was signed into law this morning, apparently by President Trump. Interestingly enough, about a third of it is going to go to the people in the form of $600 checks. The rest is aid to companies and among other things. That's just how we roll. BioNTech Pfizer vaccine heads to the EU as effectiveness against new strain is tested. BioNTech's testing the effectiveness of the COVID-19 vaccine it developed with Pfizer against a highly infectious new strain of the coronavirus as it appears to send 12.5 million doses to EU countries by the end of the year. And that's where that is. So there's still this highly contagious strain in Britain. Also has spread into Italy and Denmark. And the Great Britain remains isolated from travel to other countries, to many key countries, and that's where that stands. So, as we head into the session, we're putting risk on, and and uh, and that's that. What are we looking for in terms of numbers? Existing home sales month on month at 10. Also, consumer confidence for December, and then we're looking for API crude oil stock change after the close at 4:30 Eastern. The overnight session currently has 173,000 contracts traded. The one sigma is 400,000. The mode is 296. So we're light in terms of the overnight session. The overnight inventory is plus 1%. The imbalance is plus 1%, 1% long. So pretty balanced. The range is 31 and a quarter. Notice that the mode for range in the overnight session is 31 points. So we're right on top of what we would consider to be normal over the last 52 days, or the most common range over the last 252 days. Normal is up to 52 points. It's a multi-distribution profile. So, with that being said, let's jump right into the review segment. Yesterday, the primary scenario is a push into 72.76 right up here, and I was looking for it to fall into the 20. The 36.20. These are the key areas. Really, yesterday I expected it to be an inside day to the overnight session. The secondary scenario is a drop back into this volume cluster right here, drop back into the volume cluster, consolidate, and then start to trend towards the prior day's point of control, which was at 36.95. 36.95. Scenario one was almost spot on yesterday. We kind of saw a little bit of both, but if we look at how the market traded, here's how it traded. It opened, pushed a little bit higher. We did get to 70 on the test up. We could not get to 76, which was up here, 76, 77. And then we proceeded to move down. We ended up moving down to 36.25. Remember, I was expecting 36.20 on scenario one, but it did push to 36.25. That was 36.20 being the MC point of control, and the next key area to test below. Strong consolidation here at the low. We have a nice high volume node at the bottom, and then we start to push higher above, what's going on here, above the mid here, and then we start making our trip back to where? To the prior day's point of control. We get right to 94, which is the prior point of control. We took it out by a tick. This further proves not that I'm right on scenario two's target on the top side, but that the market is operating in an orderly way. Which is important for us to know, because when I see the market respecting daily levels and things like that, I understand that the short to intermediate time frame is likely to be in control, and I can lean on what I look at, the volume profile, the support resistance structures, price action. I can lean on those more deliberately when trading, and that's something I look for. We always want to have an understanding or a good guess at which participant's likely to be in control. Is it short time frame trading? In other words, chop, and there's a lot of respect for intraday levels. Is it intermediate, where it's swinging and it's looking at multi-day levels, composites, micro composites, things like that? Or is it longer time frame? Is it the long time frame participant who's in control, where they couldn't care less about your daily levels? They're looking at 30, 40 point ranges to execute large sums, and are looking to revalue the market in big moves, 50, 100 point moves. So I'm always testing to see who is likely in control, so that it gives a measure of confidence on what to lean on while trading. Yesterday, we ended up with a multi-distribution profile. We took back a lot of the sell-off, but we still have the 37.11 and 37.12 area up here that we're still dealing with. Currently, the market is trading around 36.89 and has pushed overnight to the 36.95 once again. We've pushed overnight to this high again and are coming off. But what we have in the overnight is a weak high. So the other thing is to note is the delta. Yesterday's delta, despite the fact the market was selling off, we opened right here. This green line is the open. We pushed higher and we pushed well below it. The delta remained, let me expand that so you can see it better. The delta remained positive throughout. As the market was falling, there was the aggressor was buying. So there was lifting on the way down, and that lent itself to more confidence. Remember, the delta is back in play because rollover is done and expiration is done, and now the delta is showing us that as the market is dropping, it is lifting the offer. So this, pursuant to that, we're likely to see it continue higher. Okay, the overnight session. So now we're going to move from the blue. This is the RTH, which is what we just looked at. Now we're going to move into the overnight session, which includes these two bars that always are left over here. Look at that high. Look at the volume profile and the high on the volume profile. That is some blunt action at the top. This is an extreme shelf here that the market has put in. You can see that we've tested this high quite a bit on the 30-minute bar chart. This is an extremely weak high. The profile is a multi-distribution profile like the convergence summary sheet shows. The overnight session pushed to the RTH VWAP on the dot. I don't really pay attention to the prior session's VWAP, but it pushed all the way back and it took back some of this low volume node. That's really what I'm looking for. It pushed into the next distribution lower right here. You can see that little peak right there, and came back to the upper distribution and is holding steady. The market is currently holding, and remember the overnight inventory. Is is flat. It is at 1%, long 1%. So the volume above and below the prior day's close is pretty much even. So I'm expecting a choppy open, but boy, we've got a heck of a target here at 95 with this weak high and the expectations for it to push into 3,700. The delta is negative this morning, despite where we are, despite where price is. Overall, pretty decent trading for the week of Christmas. For the week of Christmas, and overall a pretty active day. In fact, if we take the low of yesterday, remember I showed these statistics just yesterday. They were posted by someone on Twitter. Maybe I can grab those. Pretty important statistics in my opinion. Oh man, this thing is really dragging. Let's kill a bunch of stuff. All right, kill these news feeds, all this stuff. Bop, bop, bop. Let's free up some memory. Okay, so if you look at this image here, again, past performance is not necessarily indicative of future results. I posted this yesterday. These are the stats for the last 2 weeks on the ES from low to high. From the low to high on the ES. So if you look at this, and by the way, the NQ is similar. The NQ didn't perform as well. Again, I'm going to go over these from low to high in the last 2 weeks. In 2015, we had a rise of 4.6%, a difference of 4.6%. We always want to look at things in percentage terms because, you know, at 3,700, it's not the same at 66. At 600. So we want to look at the percent change. The percent change from low to high in the last 2 weeks was plus 4.6, plus 1.9, plus 1.1, plus 13.1, and plus 2.5. Really big swings. And overall, if you look at yesterday's low to the most recent high, it pretty much gets us there. Those are all pluses, by the way. I know comparing low to high is always going to give you a plus, but we finished the year stronger every one of those years. So it's been pretty consistent. Now the sample size is very small. Again, past performance is not necessarily indicative of future results, but it's a pretty decent indication. Here's what we see on the daily. We put in this high. We broke the one-time framing by going lower. We are now in the stem of this thing, and we are fighting this 3,700. Fighting this 3,700, and we are likely to continue to push into the stem. So yesterday did a great job of testing low. We broke the weekly, which was a really big deal. Now we need to pay attention to this. We broke the weekly, but it is likely to attempt to push higher, and I'm looking for it to stumble and have a hard time getting over the hump here at 37.12. So even though it looks bullish, I am actually neutral because for the first time in months, the weekly one-time framing has ended, and we ended it yesterday. Okay, and so right now the market's in a neutral stance on the weekly and is beginning a one-time framing down on the daily, unless we take out this high. And to me, the market's going into a neutral posture into these 2 weeks, the final 2 weeks of the year. So I'm expecting a lot of back and forth here as we start to push towards the high. I don't expect that there will be as much support for it to continue higher. Let's take a look at what's expected for today. Here it goes. Stock zones on, master levels on, session prices on. So, what are we looking for today? 1 second. So here we go. We are, again, the structure that we're looking at is this. Impulse down, pull back, higher low. Remember, we did not complete this impulse. We did not test this impulse lower. Higher low, we did breach the weekly, and then we have an impulse up on the 15-minute consolidation, pullback to about almost the mid of the impulse up, and then we have what looks like a continuation higher. Okay, so that's the primary scenario is going to be looking for a choppy open, simply because the inventory is balanced. We're opening on top of the overnight point of control, on top of this high volume node. We're above VWAP mid. We're likely to chop. I'm looking for it to be responsive towards yesterday's point of control, which was down near 3680. The point of control yesterday is 3681. Expecting it to come back, and then I'm looking for an impulse higher to push through this 94 quarters yesterday's high, and then I'm looking for it to challenge the 3700 here quite a bit, and then start to work its way back towards 3711 before it fails. Before it fails to continue. Expecting it to finish somewhere actually below the 3700 by the end of the day. Okay, the secondary, don't leave your computers on overnight, folks. They just get really slow. The secondary is, come on, man. The secondary is an open auction that squeezes the high, pushes the 3700, squeezes into 3702, which is the next stock zone up here, and then runs into this cluster up here, consolidates for a little bit, and then comes back. We'll likely see ourselves back at the open and potentially just finishing with a higher low, higher high, but remaining inside of yesterday's range. These are the two key scenarios. We're opening in balance of yesterday. We're opening in that upper distribution of yesterday, not expecting it to be a runner this morning. Okay, so that's where we stand. I want to remind you all about the event occurring tomorrow night, tomorrow evening at 6 p.m. Eastern. We are getting together for a fireside chat to finish up the year. We'll have the 4 head traders from Convergent Trading, and we'll be discussing just history, the markets, how things play out, their progress, their development, as well as how they see things going forward. You can join by going to go2ct.pro/fireside 2020. The link is also in the description of the YouTube video. You can find it there. Go to ct.pro/CT Fireside 2020. Good luck. I'll catch you, mind your risk. I'll catch you tomorrow morning and also tomorrow evening. Good luck. Cheers.